The Bears tried to take it to the Bulls, but they didn't have enough power. Hey, if you liked the video, like and subscribe below. I want to know what you're thinking. What do you think about the markets? Let me know in the comments section below. The S&P 500 finished down a measly 0.22% for the week. Neither the Bulls nor the Bears were in control for the week. On Tuesday, it really looked like the Bears were going to drag the S&P 500 lower for the week, but they simply could not hold on. So from there, the S&P 500 traded sideways to up. Being Friday was the big day for the Bulls on the S&P 500. So we're going to look at a chart of the S&P 500, and then we're going to get into what we did last week, some of the new purchases, and then also what we've got going on for this week. Someone once told me that it was rude to talk about charts, but I know y'all love charts, and so here we are. Here is a daily chart of the S&P 500, and these last four vertical bars are the last week's trading action. Each one represents 1 day of trading. You can see right here, Bears took it home on Tuesday on the open. They simply couldn't hold on. If the market can't do one thing, it does the other. And so here we are again, opening the week right at resistance again, or we don't know we're going to open on Monday morning, but we close the week right at resistance. So a few things here. Longer term trend, still down. Here's the trend line. Momentum is still negative as well. Can't see that here, but got that. We'll talk about that here in a minute. And then the daily is up. Obviously, we've got 1, 2, 3. This could maybe still be the third leg. You count 4, it doesn't really matter. Still up, pretty tight channel. Still a possible wedge, which is a reversal pattern. And now we've got a possible double top here. So you can see like double top. So basically it's resistance, right? Here's an example of a double top. Top right here, top, boom, and then here's the triple top. 1, 2, 3. Here is 1, 2, possible double top. So we'll see if that plays out. But looks good. S&P 500. We'll see if the Bulls can hold on and continue the march higher. When you look at our investment decision-making process, it is a top-down approach. So we approach the market from a very high level or a broad level, and then we go down to the styles of the market. So for example, large versus small, or growth versus value, and then the sectors of the market or the different indices of the market from there. And so our major two indices, what we look at from a very, very broad level, are the S&P 500 and the MSCI All World ex-USA Index. So we look at those to determine, okay, should we be in a risk on? Should we be taking a lot of risk, or should we be a risk off stance? Right now, those are telling us that we should still be in a risk off stance. Even though we've had this nice rally in the S&P 500 and frankly some of the international markets, then until we get a longer term movement of that, we still have a negative reading. So this month it closes out, and we'll see where the reading ends up. But right now, it looks like it's still going to close negative. The markets have a lot of work to do for them to close positive on those momentum indicators. They could do it this week, but chances are they're not. So as far as last week, we did end up getting into our toes wet in emerging markets. So emerging markets, essentially what has happened is they've come down, and then they've gone sideways. Now, after markets go sideways, and they do it for any given amount of, like a longer amount of time, then there is the probability of it trending in one direction or the other from that breakout of that sideways movement becomes equally split. So it's like a 50-50 split. If markets are going down and down and down and down, and then we see say for example, they go down and down and down for 3 months in this really, really tight channel, like really tight, and then they go up for 3 weeks. Now, chances are that it's going to go down, or at the very least, sideways. So we haven't seen that in emerging markets. We've seen this down movement, we've seen a longer term sideways, and we just saw a break to the upside. So we got our toes wet there. We'll see how that one plays out. Now, we're still, again, we're going to see how the S&P 500, MSCI All World ex-USA Index closed at the end of this month, and then we got our toes wet in emerging markets. Don't have any plans to purchase anything additional this week, but of course we'll be watching closely and we'll see if anything becomes really, really attractive. But those decisions are pretty much made on a weekly basis. And right now we don't see anything screaming buy for us right now. All right, with that, have a great week. And one last thing. If you don't have a copy of my book, Home Run Financial Planning, get a copy. Get a copy. Click on the link below and we'll get it out to you. Have a great week and we'll talk to you next time.